In the previous part of the video, we have seen what we should do to adjust for expenses that have been incurred but have not been paid. In this section, we will see what are the adjustments that we need to do when the business pays up the expenses in advance, meaning the business pays more than what they are required to pay for the accounting period. These payments are called prepaid expenses, or what we call payments in advance. Now, prepaid expenses are amounts that are paid in the current accounting period, but will only be incurred in the next accounting period. So it means that the business has actually paid for the service, but has not benefited from the service yet. So even though it is paid in the current accounting period, this payment should not be treated as expenses of the current accounting period. A prepaid expense is a current asset. As the business has already paid for the rights to use the service in the near future. Let us illustrate with an example. Look at example 2. Example 2 says insurance premium of 600 was paid on 1st of April 2013 for the 12 months from April 2013 to March 2014, and the financial year ends on 31st December 2013. So take note that insurance premium of 600 that was paid on 1st of April 2013 was for 12 months, from April 2013 to March 2014. But you also take note that the financial year ends on 31st December 2013. So how do we record this transaction in the general journal? Now for the first entry made on 1st of April, we will have to debit insurance expense. For the whole amount of 600, and we credit your cash at bank. For the same amount of 600, in order to record the payment that was made. However, we see that there are 3 months of insurance expense paid, which is actually for January to March 2014, which is actually in the next accounting period and should not be included in the current year's expense. Thus, we have to record the second journal entry where we will debit prepaid insurance and credit insurance expense. Now, why do we debit prepaid insurance? Remember, we mentioned earlier that this is a current asset. And for an asset, debit is plus, credit is minus. So when we debit prepaid insurance, we are actually increasing the balance. Note also that the insurance expense is an expense account, which means debit is plus, credit is minus as well. Now, how do we get the figure for the year 2013 then? Note that there are only 9 months from April to December 2013. So what we will do is we will take 9 over 12 times 600, which will give you $450. This will be the insurance expense for 2013. Similarly, as there are only 3 months of prepaid insurance, we will take 3 over 12 times 600, which will give you 150. So we will credit insurance expense by $150. and debit prepaid insurance with the same amount, 150. By crediting insurance expense by 150, we are actually reducing the insurance expense by 150, so that the insurance expense incurred for 2013 does not include the payment of 150 that was made for the next accounting period, 2014. The insurance expense to be recorded in the income statement for 2013 will therefore be 450 and not 600. So we will have to transfer this amount to profit and loss so that it will appear in your income statement. So the amount that we transfer over will be 600 minus 150, which will give you 450. We will take a look at the insurance expense account and the prepaid insurance account for further explanation. Now remember, when we record the first journal entry, when the payment was made, that was on 1st of April. We debit insurance expense and credit cash at bank. So in the insurance expense account, we record a debit of 600. And write cash at bank here. To show that this is the account that we actually credited. Now remember to write the balance of $600 debit in the balance column here. Now on 31st December, in order to adjust for the insurance that was paid in advance, we credit insurance expense and debit prepaid insurance. So we record 150 in the credit column here. 150. And write prepaid insurance here to show that this is the account that we debit. So what is the balance after this adjustment? Is actually 600 debit minus 150 credit, so we'll give you a balance of 450 debit. Now this is an expense account, so we need to transfer the balance to profit and loss so that it will appear in the income statement. So you check that the balance is a debit balance of $450. So in order to clear the balance to zero, we have to credit insurance expense by 450. So we write 450 here. The account that we debit is profit and loss. So we are going to put a 0 or the dash in the balance column because we have transferred the balance to the income statement. For the prepaid insurance account, note that we recorded the journal entry of debit prepaid insurance and credit insurance expense in order to adjust for the insurance that was paid in advance for the following year. So we record 150 in the debit column. And write insurance expense here to show that this is the account that we credited. Write the balance of $150 debit in the balance column. On 1st of January 2014, record the balance brought down, since there is a balance brought down to the following year. So we write balance brought down of 150 debit. Now, similar to the accrued expense portion that we learned in the last video, we also have to make reversal entries at the beginning of the year for prepaid expenses. These entries are made to ensure that the amount prepaid in the last financial year is included as expenses in the current financial year. Now, continuing from the previous example, we will see what we will record in the beginning of 2014. Let's take a look at the journal entry first. So for the journal entry, do note that the purpose is to reverse out the balance of the prepayment that was made in the previous accounting period. In our example, we had a 150 debit balance of prepaid insurance at the end of 2013. So we will credit prepaid insurance for 150 and debit insurance expense to transfer this amount to the insurance expense account for 2014. So we will write here insurance expense $150 and we credit prepaid insurance. For $150. Let's take a look at how this entry affects the insurance expense account and the prepaid insurance account. Now what we have from 2013, if you refer back to the previous records, is we have cash at bank here, $600 debit. That's from your previous record. Prepaid insurance $150 debit. Then we transfer this to profit and loss. So 450 and we dash. Now in 2014, because of this journal entry, we debit insurance expense for 150 and we credited prepaid insurance. So now you have a balance of 150 debit in the insurance expense account. Now, what about the prepaid insurance account? In 2013, you have your insurance expense that was from the previous record as well. 150 debit. And you have a balance brought down. $150 debit. Now on the same day, 1st of January 2014, we did the reversal entry. So now we credit prepaid insurance for 150 and we debited insurance expense. You note that the balance of the asset account of prepaid insurance is cleared to 0 after the reversal entry. Now, do you notice that the insurance expense account has a debit balance even before any transaction has taken place for the year. This is because we have adjusted and placed the prepaid insurance into the correct financial year, which is 2014. So what are the effects of the adjustment that we made for prepaid insurance on the financial statements? Firstly, let's take a look at the income statement for the year ended 31st December 2013. Now, under expenses, you will have this insurance expense. So because of your journal entry where you debit prepaid insurance and credit insurance expense by 150 in the year 2013, you are actually reducing the insurance expense by 150. So the initial amount was 600, but you have to subtract out 150 because this is the prepaid insurance, and we get 450, which is the expense for the year ended 2013. Now, if you had not done this adjustment entry, the unadjusted trial balance will actually show the actual amount paid, which will be actually $600. Now, how about the balance sheet? For the balance sheet as at 31st December 2013, you know that you now have under current asset, because prepaid insurance is a current asset, you have prepaid insurance. This is for the year 2013. So how much is the prepaid insurance? It will be $150. Now these are before the reversal entries have been done in the year 2014. So do not be confused. Now looking at the example above, let's try to conclude what are the effects of not making adjustments for the prepaid insurance that was paid in April. Now the insurance expense will be overstated by 150 because you are taking 2014's prepaid insurance into the insurance expense for 2013, which is not correct. Now, when this expense is overstated by 150, your total expenses will also be overstated by 150. Now, since total expenses now is overstated by 150, your profit will be understated by 150. This will be the effects on the income statement. How about the balance sheet? If you had not done the adjusting entries, there will not be any prepaid insurance. So your current asset will be understated by $150. Because your profit is understated by $150, your equity will similarly be understated by $150 because the profit is understated. Now we have finished the part on balance date adjustment for expenses. So there are two types. One, which is the accrued expense, where the business has not paid for the expenses which have already been incurred. Second type is prepaid expense, where the business paid expenses in advance, meaning paying for the expenses that is meant for the next accounting period. So we can summarize the balance date adjustment for expenses in this table. So for accrued expense, okay, accrued expense is incurred but not paid. Okay, incurred in the current accounting period but not yet paid. So whatever you have paid for that year, you have to add this accrued expense, and that will give you the total expenses incurred for the current accounting period. Now, prepaid expense, as we mentioned, is payment in advance. So to adjust for this, your expenses that you have paid, you have to subtract this prepaid expense in order to get the expenses incurred for the current accounting period. Now, in the next segment of the video, we will be focusing on the balance day adjustments for income.